Let's pull up a Signature Global on the screens and see what that counter is doing in trade. They did come up with their quarterly update. Today we are seeing profit booking. The stock is down almost 4%. In fact, the real estate pack as a whole is down. Let's pull up a 5-day chart as well and see what the counter has done, because the numbers have been pretty strong with regards to the pre-sales go. Almost a 2.2 times is the kind of jump that we've seen on that front. Apart from that, if you see in terms of the collections, they've seen a growth of around 40%. In terms of unit sales, 29% is the kind of growth. Their net debt has gone down as well. And in terms of, the sales have been driven by new launches. Apart from that, from here on, how the remainder of the year pans out is going to be interesting to watch out for. But let's welcome in Rajat Kathuria, CEO at Signature Global, to talk more. Rajat, firstly, congratulations on the strong set of numbers and thank you for speaking to us. How are you looking at the numbers so far? Because usually pre-sales, we see a good growth, but a lot of times that does not translate into revenues. How are you looking at it with a 120% growth in terms of pre-sales, absolute translation into revenues in the current quarter?
Yeah, Hiral, thanks for inviting us to your show. Hiral, I'll just talk about pre-sales first and then talk about revenues as well. So see, in terms of pre-sales, Hiral, our strategy and our thought process is very simple. We feel that, mid-income housing across the country, and especially in the Delhi NCR market where we operate, is hugely underserved. That is the reason why as soon as, supply gets created, demand is kind of, also getting created. So supply creation is leading to demand creation. As the size of the company is growing, we are able to create supply on a more sustained basis, which means that we are able to come up with launches on a, every quarter or on a very more frequent basis. And that's the simple reason, with demand catching up with the supply creation, the pre-sales numbers are growing on a regular basis. So if you look at this 9-month span for this financial year, we are doing pre-sales of roughly between 2,800 to about 3,000 odd crores on a sustained basis. So that's why pre-sales on a periodic basis is kind of looking better, is always looking better, I would say, than the years gone by.
Okay.
With growth in pre-sales, collections tend to catch up because, these are typically, off-plan units where, construction and milestones getting achieved, collections come up, and hence collections, have a lag effect with the pre-sales, but they always tend to keep growing. Revenue recognition, Hiral, however, is completion based. So the accounting method suggests that only once you've completed a project and you've collected, significant or almost the entire, revenues from the customers, only then you can recognize revenues, which effectively means that any company's revenue recognition will reflect a 3 or 4 year historical situation, because construction, does take of a project takes about 3 to 4 years. So it will represent the size and scale of the company, which was 3 to 4 years, earlier. Now, for a company as young as ours, because we are just like a decade old, and we've literally seen a J-shaped, growth in numbers over the last 4 to 5 years. Their, pre-sales show the current picture, and revenue shows like, a 4 or 5 year, earlier picture, and hence, that gap which you're talking about.
So Rajat, an interesting point you make over here. So when you see a pre-sales growth of almost 120%, right? Or let's take a number of around 2,770 odd crores is what we're looking at in the third quarter. How much should we actually account for in terms of revenue recognition? Usually, what's that trend usually like?
Hiral, we've given certain estimates, at the start of the year. So on 4 or 5 key parameters, we've given a guidance, and we are sticking by it even as we've crossed these 9 months. So in terms of launches, we've given a target of 16,000 crores for the year. In terms of pre-sales, our target is to achieve 10,000 crores. In terms of collections, we are targeting about 6,000 crores of collections for the year. And in terms of revenue recognition, which is basically completion of earlier projects, we've taken a target of 3,800 odd crores. So we are sticking to this guidance even, at this point of time in the year. So these are the guidance numbers on all key, parameters.
Rajat,
In addition
I
to,
want to interrupt over here on the collection front. I think by the end of the third quarter, you've achieved almost 56% of your collection guidance. You're just left with another 3 months going. Are you actually confident that the 50% which is remaining will come in 3 months?
so see, collections have, a lot of sales have happened over the last, 2 to 3 months on an average span, 3 to 4 months as an average. Collections will, be quite good, in the last quarter, and hence, we are keeping the target alive.
Okay. And how are you seeing the price trend pan out from here on, taking into consideration areas where you're present in, number one? What is the trend looking like?
So see, in Gurgaon, prices have kind of plateaued a little, So if you look at the last 10-year trend, the prices would have gone up in an inflation equivalent sort of manner, like, 6-7% of annual increase would have happened. But that catch up kind of, happened over the last 2 years itself. So last 2 years, prices have gone up significantly. But, you know, at this stage, we are seeing that prices are not rising in the manner they were earlier. But, volumes for middle income housing products are still healthy.
And what's the new launch pipeline expected to look like from here on? What's the quantum and how much will that translate into?
So we have another, 25 plus million square foot of, dry land, powder, effectively dry powder with us. So there's about 25 million square foot, which is yet to be launched. Even if I put an average price tag of 12,500 rupees a foot, this is almost, we're talking of a number between 35 and 40,000 crores. The good part is that most of this land is owned by us and is not held through any of these, service or, whatever contractual agreements. Bulk of this land is owned by us, and we've, already made payments for this land. So on a every quarterly basis, we intend to keep coming up with projects, out of our own portfolio.
Right, so that's an interesting land bank to watch out for as well in terms of translating into revenues for Signature Global. But thank you so much for joining us on the show and sharing the views. So that's the management
Thank
of
you.
Signature Global. Today, yes, the sector as a whole is seeing profit booking, but seems they're absolutely on track and stick with their guidance for FY25. Though the collections that they've got taken in the first 3 quarters is only at 56% of the total. So